This thing's awesome.
We got our pie.
Yeah.
It's gonna be amazing.
And
And
coffee.
coffee.
Ready to go get some pizza? We're gonna do like bar stools and test the flop. Oh, it's flopping around. Wow, that looks really good. And a cheese slice, what do you want?
Pepperoni.
Pepperoni slice, do you want two?
Yeah.
Two pepperoni?
Yeah.
Everybody that's watching this video, this is on my crypto channel. I've got another company called C Squared Trading where we teach people how to day trade, swing trade, invest, make a lot of money in the market, and you are missing out because there are multiple markets with the same strategies and they work. So keep focused on that. My moving averages moved up, and now I think we're gonna move up $100 per coin. So that would be 1,200 bucks I would make, which isn't bad. I mean, just for sitting outside, enjoying, it's up $4 from where we last looked at it. So the momentum's picking up speed, and basically when you have that, boom, watch out, baby. All right. I think this is one of the pieces that allows trading to stick around for cryptos. So if you guys understand, like in stock trading, you have basically a limit. Like if you want to be an active day trader, you have to have a $25,000 account or more in order to make more than 3 day trades in a 5-day period. And that was a rule that kicked in 2001 called the Sarbanes-Oxley Act. But with cryptos, you can literally have $1,000 to $10,000 and you can day trade as much as you want. And there's so much liquidity just running up and down in these markets. This is a 5-minute chart of Ethereum going from 700 per Ethereum coin at 10:30 a.m. up to 750. So almost a 10% move within a few short hours. And here is the absolute craziest thing that allows traders to make a lot more money with this than typical stocks. And here it is. They allow you to be the market maker. When you put your sell in to get rid of your cryptocurrency, you have the option of letting the exchange match you up at that minute with another order, which is called a limit order, where they are the market maker. But they have a post order. They call it post order. And basically, like if you wanted to sell something at a limit and you post only, right? Basically what that means is they're going to match you up. Let's say I want to sell, I bought at 701, sell at 740. If I put in an order to sell at 740 and all the volume comes in at 740, it just fills my order at 740, and guess how much the fees are? 0. If you let them do the filling for you, it's $27. You know, some percentage of what, you know, it's $10, it's $8, it's $30. It's a percentage of what you're trading. But if you let the market just fill your order because that supply and demand is there anyway, it's $0. And if you're an active trader, imagine you're doing 5 trades a day or 2 trades a day even. That's anywhere between 5 and 30 grand or more a year just in fees and commissions for the exchange. So what's absolutely brilliant about this is that they allow you to become a maker. They allow you to post into the supply and demand in the blockchain, and your fees are non-existent. So that is absolutely game-changing. And once people start to realize that you're saving literally by just, let's say you're a day trader, you're literally saving thousands by switching to day trading Ethereum, and you have no limit on the amount of capital you need to start with. So it's really cool. Just a quick tidbit, little fact that thought might be interesting for you guys to know. All right, so one of the things I want to talk about is when you're trading or investing, and this is in regards to cryptocurrency. You know, it takes a while for these things to catch on and go mainstream. And what I mean by mainstream is, mainstream could mean one of two things. It could mean everybody knows about it, that's one type of mainstream, or everybody is trading or invested in it. And we haven't reached that yet. We haven't even reached 1% yet of individuals being invested in Bitcoin or any sort of digital asset like that. So with that being said, you know, one of the best things if you're a trader or investor in any kind of space, you want to be at the beginning of that wave. And I'm telling you, like right now, what is it, like May 2018, we are at the beginning of a wave where if more and more institutions continue to accept Bitcoin and Ethereum, and accept it as in like the acceptance of it, not necessarily paying with it, but the more they continue to accept that, then people will start to invest in it with their disposable funds or assets as investments, and that's what will push that next big wave up. Now, for right now, we may be in a few month kind of doldrum or something, or consolidation, if you want to call it that. But at the end of the day, like, the main thing that you want to focus on is that you're in the beginning of the wave, because I've seen it happen too many times where people buy right at the highs or right at the, you know, in the euphoria of things, versus kind of when nobody's talking about it, or that, you know, Bitcoin isn't absolutely skyrocketing. So keep that in mind, invest wisely. This is not advice, it's just my opinion. You could lose everything you put into anything. Stocks, real estate, cryptos, whatever. So keep that in mind while you're investing, but just know that we're quite early in this whole process.
The other thing is this, like, if you work for yourself, you can increase your income through maximizing the one thing that's doing well for you. So again, I just like this whole Dave Ramsey thing, or save money and pinch pennies. It just doesn't, to me it doesn't make sense, but sometimes I don't know how to word it. Like, I don't necessarily have a strategy for how to tell you to make $100,000 a year. Like, my buddy's like, okay, here you go. My buddy's like, we don't want to move to this area because the houses are too expensive and we can't afford it. But did you go to the bank, went to a mortgage banker? Did you go to somebody and see what the affordability is? Or are you just saying that because you think a $500,000 house is too expensive? Like, you never went and investigated all the way down to what you could actually afford and made, like...
You're just getting down to mindset.
That's one thing, yeah. And then the other thing is this, though. If you go buy a house in a no-demand area, a low-demand area, and I'm not saying houses are good investments or bad investments, but we picked strategically a house, or she did, a house that was outside of an exploding neighborhood. So, yes, it costs a little bit more to get in than if you were to buy, you know, a house 30 miles north of you. But within a year, the house jumps up
$100,000.
$100,000 in value.
Mm.
And it's not, we're not saying that that's an investment. Like, houses shouldn't be an investment. You should be able to afford to live where you're living. And if you don't know what that affordability is, then what do you do? So I think part of the problem is, like, figure out what your lifestyle is that you want, and then plan out, like, for me, I love eating out, so I know I'm going to spend $1,000 a month eating out at least. So I know that. Like, I know that that's part of what I need to make.
Yeah.
You know? Mm-hmm. I don't go buy new clothes all the time. I don't shop like crazy. I don't, you know.
Yeah.
So you write out your lifestyle plan, you plan it, and you frame it out. Like, we need to expand this house, right? Mm-hmm. So we have to go budget it out. Like, is this something we can do? We have to actually go through. Oh, nice, Maggie. You know who's really good about this is Robert Kiyosaki. He's got the Rich Dad Poor Dad. One thing that's fun or cool about that is, like, he makes it really clear, like, on a quadrant, right? He's basically like, your house is taking your income. Mm. So that's not an asset.
Right.
In his eyes. An asset is something that's producing you income, and
right.
a liability is taking your income.
Right.
So it's like increasing your income or your assets, you know, selling your house, whatever you want to do, like increasing your assets that make you money. You don't necessarily have to reduce your liabilities. You just have to know what your liabilities are.
Yeah.
So did anybody ever say save in there? No, because saving doesn't get rid of your liabilities. It doesn't increase your assets. Mm-hmm. A savings account doesn't make you money. Mm-hmm. It's money you made that you put aside.
Yeah.
You know, so I think, like, that's where the rub is that I sit there and I'm like, the way to really think about this is if you work for yourself. Now, if you don't work for yourself, it's a little bit different because you have a set income. But even then, like, as a set income, you never know when you could lose your job. Mm-hmm. So a fallback, an asset can actually be your brain. Like, you're investing Like one day I walked into Barnes and Noble and spent $350 on books, but I know that that's going to return $100,000, you know, by just reading those books.
If you
But
don't have
if
it.
you go and create, like
Right.
blow up your business,
But still
focus.
be wise with what you do have, so you're not wasting it.
Oh, I didn't say to waste it. But it never teaches you to go and
Think big.
think big and expand your business and try to make more money, right? It's like, hey, you mow lawns the next 30 years, save all this money, save up $2 million in retirement, and retire. By the time you're 65, you're gonna be like, dude,
It
I'm
doesn't
too
teach
tired
you
to
upsell
retire.
and whatnot.
Yeah, so so this guy talks about MJ DeMarco. He talks about there's a slow lane and a fast lane, and it's like you have to get your mind, and like she said, it's mindset. You have to get your mind around like, I'm gonna get out of the slow lane and get into the fast lane. And what is the fast lane? The fast lane is starting your own business, but getting a mentor, getting somebody that already has done it. So again, to give you guys an example, if you're watching this video, is the crypto mining guy says, I've been messing around with this for 3 or 4 months and I realized the easiest way is this, this, and this. And we walk in and he tells us this and we can get started within 24 hours versus spending 3 months. You know,
Yeah.
think about it. That guy had the same energy that I do about crypto mining right now 6 months ago. He was super excited. He went out, he built a rig, he spent all this time building it. But had he gone the short route and bought a rig and got a mentor, we'd be benefiting even more. In fact, maybe we wouldn't have been able to talk to him. But the point is, like, he might have been 2 years ahead of where he is now.
Yeah.
Because he's not spinning his wheels. Maybe he's out hustling another job and getting more money to put back into the next rig and the next rig and the next rig, and then boom, he blows it up because he's not having to screw around building the rigs, programming them, and all that stuff.
Yeah.
So same with real estate. Like if you want to make money flipping houses, go talk to somebody that's doing it. You know, go talk to somebody that's doing it and be like, what exactly do you do? What do you look for? You know, and then they're like, I look for this and this and this. That's how I found my house. And then I have these people I work with. Well, can I borrow them if I ever need them? Yeah, sure. You know, and they tell you like, get started by doing that. And so they give you a hand because they want to see you do well, and you're not spending a year or 6 months.
Yeah.
Hey guys, all right, awesome. If you love that and you want to see more, subscribe below, click on the button right now. Click, click, click. Do it. Don't be lame. Click it.
I saw an Italian man once stopping grapes. He's like, for hours, and I was like, gosh, you have to make the vino.